So I'll officially start recording it. I'm just going to do it on my own computer. I know this has been streaming on YouTube and other areas, but I'll start officially recording it natively so I can trim this up and post it as like a weekly recap. So quick question for everyone that's watching right now. Do you want to do this every week? Do you want to do this every week with me? Like weekly recap? Facebook is streaming, David. Awesome. Thank you so much. Larry says, is that your girlfriend or beautiful wife? That is my beautiful wife. 10 years. And my wife's birthday is not next week, but it's on Valentine's Day. So the old Birthentine's Day in this household. But that is my wife. She says hello. So the new office has been renovated. Now she has to be careful because she knows that the camera can pick her up in the backdrop. So anyway, but yeah, 10 years, no kids. So life is good. Anyway, so I got the recording going. I'll trim this up. I'll post this on my YouTube channel as an official, upload. But this is fun. So like I said, you want to do this. You want to do this regularly. I could probably do a power lunch every Friday with traders. If you want to get in and join this weekly recap, that's great. Make sure that you're staying in tune with the weekly outlook, which I post on Mondays. So again, I'm not going to shamelessly ask, but you know the deal, right? If you want to follow somebody on YouTube, what helps them is you like the video, you like the session, you subscribe to their channel, click the notification bell when I go live. When I do something like this, I'll post it in the community. We'll go live, but let's plan on this every Friday. Let's do Friday at noon. Okay, Friday at noon, and we'll have a little power lunch, a little recap, and that'll be a lot of fun every week. Also, we'll be able to just talk about what's happening, what's looking good for next week, and that'll keep me on the up and up for Monday's weekly outlook that I do first thing on Monday morning. Okay, all right, all good, cool. And sound is all right. I just want to make sure sound is okay. This is like a noise canceling headphone or a microphone, so usually the sound is decent. Okay, good. So let's make a note. Let's make a to-do. We'll do every Friday at noon. I'll start repeating this. I'm having a great experience right now with Restream and posting on Facebook, and I'm on Twitch. I'm on Periscope and YouTube. And this is actually very easy to manage. I'm literally managing. I've got the chat running on YouTube and on Restream, and it's all coming from, or I keep calling it Restream. Well, it is Restream. It's on Restream, but all the chat is coming through on YouTube. So this is fantastic. Good. Okay, well, hey, let's switch the screen, right? So this is the weekly recap, little icon for that. My Keep It Seriously Simple video series. I'm going to take some requests. Okay, I'll let you know what I have going on right now. So I'm going to type this up on the chart. Let's use some contrast. Let's use some yellow here. And I'm going to make this nice and large. So videos that I will be working on. So this is KISS subjects. Okay, right here. Right now, I have some videos that I'm trying to finish up. I'm trying to finish up one on drawdowns and managing bad trades. That's one that I'm going to finish up here in the next probably 1 week or 2 weeks. I'm just trying to get all the trimmings on it. Next one would be my portfolio tester and architect. Great software pieces that I use for my robot trading. Okay, so what I'm doing is I'm able to I can run multiple strategies at the same time. I can determine what time I want to trade it. Is it certain months a year, certain days a year? How far do I go back? What strategies am I using? This software has literally saved me hundreds and hundreds of hours of testing. So I want to do a video on that. The developer is given an awesome promo code. The promo code is KISS. And that'll get you $50 off a license. I think it's a $500 license for $450. That's a little promo code from KISS, and it's an awesome combo. Like having the portfolio backtester with the architect is an awesome piece to improve your data, to improve your confidence in your strategies. And again, the last 3-4 years, I've really dove deep into more robot trading, more automation, and it is definitely helping me as a trader. So it's making my trading a lot more consistent. My entries, my exit, my management, it's just letting me plan trades and let the strategies do the work. Next, I wanted to do another one on news trading. Okay, news trading, and I would focus primarily like news trading in stocks around earnings, news trading on gaps. In Forex, we talk about news like we had this morning, non-farm payroll, CAD news. We had some really good jumps around 8:30. Quiet on the dollar front, but pretty strong on the CAD. And just price action, like news trading price action. And also, I think I owe this a video, but doing like Fibonacci's or Fibs and Gann. So these are, these are important kind of retracement levels, projection levels, extension levels. And I just want to do a video on how I use them. Kind of best practices on using fibs. Do I use them 100% of the time? Am I always using fibs and Gann numbers? No, but it's a great reference to have major areas of support resistance coming in with pockets and inefficiencies, liquidity levels. There's like when everything kind of aligns, you see like amazing reactions at these very precise spots. So Fibonacci levels, many of you out there are probably familiar with them. The 23% retracement, right? The 236, or the 50, or the 382, or the 618, or the 786. All those are very common fib numbers that are used regularly. Gann retracements, there's only three I want you to remember: 30, 50, and 70. Right, and so in that video, I will be adding more to it. So that's 4 videos that I'm going to be doing within the Keep It Seriously Simple video series. So what I want to do is I want to take some requests. Right, I want to take some requests. Does anybody have any? And again, if I've got 70 people watching and everyone's got a different idea, then I guess I'm going to be busy for the next little bit. But my question is, is there something else you want to see? I have 11 lessons out right now for the KISS series. If there's more you want to see, let me know. If it's something specific, I saw somebody this morning talking about, would you do like a basic options trading, which I can certainly do that. It's going to be basic. I mean, my options is basic. What is the software? I'll show that. I'll show the link. It is tradingindicators.com. It is Portfolio Backtester and Portfolio Architect. Yep, my good man Daniel made that with his team, and it is an awesome piece to, like I said, test your robots and save you a ton of time. If anybody's used MetaTrader 4 and Tick Data and Strategy Tester, what you notice is you run a test, you get your results, you start over, you do another currency pair, you run a test. It's all like manually one at a time. That software lets you set it up. You can run it on, 30 different instruments, whatever you want currency pair wise. I mean, you can run stocks, you can do all sorts of crazy back testing, and it's incredible. So if you have the strategy and you have the tick data, you can trade it, you can test it, and get some great results. Okay. Donna says Apple. Okay. You want me to just do a video on Apple? Basic options trading. I thought I'd do that as well. What else? What else request wise? Okay. What else do we have request wise? More focus on Forex, says Nadeem. You've said that a few times, right? You've said that a few times. Look, my weekly outlook, right? My weekly outlook, it is stocks, it's Forex, it's cryptos. Nadeem, if you want to be in my trading room, and I'm just saying, like my trading room, we are looking at futures, looking at the stock indices like the SPY, the Qs, or the ETFs, the SPY, the Q, the DIA. We're looking at those indices every single day, getting some gauges on what the market's doing, risk on, risk off, and we're all Forex, man. We're spending 1 to 1.5 hours a day on Forex. So if you want some hardcore Forex knowledge, then again, like my Flex trading room is a great option. Okay. So we can do some Forex today for sure. We'll get some price action today. Let's see here. Full details on market cycles from, is that month to month, or is that like month to hourly? What's that question there? I'm trying to decipher what you're saying there, Uchi. Yushi, how do you say that name? Sorry. Let's see. Look at Apple. Papro to look at Apple. New Zealand dollar. Okay. All right. So now I'm just taking requests. I was talking about doing like a video series. Again, my Keep It Serious Simple is about like timeless videos. I want these to be something I can put out there, and thousands of people can watch it over the several months, and it's education that can be as valuable today as it was 5 years ago, as it is 5 years from now. So I want to do a subject that I think a lot of people can benefit from. Okay. All right. So let's move on. Let's get to some charts. Let's get to a little weekly recap. Currently, we just had a great session. I just finished up this little Price Action Pro bootcamp, and I want to take a look at some stocks. So where are we? Let's go back into the chart here. We were looking at the SPY earlier, and let me get back into this. So we were looking at the SPY and talking about some price action on the day. And what you're going to notice here is that we were talking through this at a time where we were looking at maybe a day trade and starting to buy. So give me a second here. Make sure my stream is still going. There we go. Make sure that stream is still going. All right, good, good, good. All right, I'm just noticing a little lag. Okay, we should be good. Trend Seeker Pro examples. Okay. All right, just bear with me, Donna. Right, Larry, bear with me. Let's talk about some price action. Okay. I can throw on some Trend Seeker Pro, right? I mean, we can look at a bunch of different strategies. I would say this though, like think about just trading in general, right? Look, I can show you 50 different strategies. But at the end of the day, those strategies are going to do the following. If it's a trend-based strategy, are you trading a trending market? If it's a range-based strategy, are you trading a ranging market? So I mean, what you need to do, what you, the trader, need to do is you need to understand what your strategy is trying to accomplish. So when I'm talking about looking at the SPY this morning, we were looking at a 0.4% gap higher. And my thoughts on this was the following. I thought, you know what? If we have a gap higher, let me find a smaller line here. Give me a second. If we find that we gap higher here and we come back and fill this gap, I was interested in looking for an opportunity to trade this morning. Okay, now I understand that I'm running a live session with 150 people. I understand that it's going to be, distractions as we're going from instrument to instrument. And I said this, if I'm going to trade this way, I need total concentration, right? I need to like this would have been my morning. If I was going to trade the SPY this morning, I would have been staring at my chart from the open and I would have been waiting for this bullish candle to pop up right there. Everybody see that? Like that is what I needed to see because we're very close to filling the gap from yesterday's close into this morning. So this is my first sign of a bullish move, very close to where I want to enter. And so that would have been my entry right there. When that candle closes, then I would buy the SPY. And if I buy the SPY, let's find the exact price. You can see the crosshairs here. If I bought the SPY at 386.80 and it's up to 387.74, let's do the math. Okay, 387.74 minus 386.80. Okay, I'm up 94 cents. Now, that 94 cents, is it a big mover? No, but it's 386.8. Okay, I'm up a fraction of 1% of the day for that particular instrument. Now, depending on how I'm trading it, am I just buying it with no leverage? Then I'm up a fraction of 1%. If it comes back up to the high, we were talking about this just simply buying the instrument. If I bought it right here, I'm looking at about a 0.4% gain. Now, that doesn't sound like a lot, but 0.4%, imagine this. Okay, we're indecision from yesterday, right? This is the close of Wednesday to the open of Thursday. It's the same thing, right? We have price closing end of day here, opening Thursday. You go with the flow and it closes higher, you're up. I mean, this is your entry. This is trade one. If it pulls back to the pivot, pulls back to the close from the day before, that's trade two. The stop loss is very tight to that. This move on the day from like 383 to 386, you're talking about a 1% plus move. I mean, this is what adds up. You take good trades, it adds up. I will say this until I'm blue in the face. Process equals profits. So, I mean, it's not about over leveraging. It's not about going all in. It's about taking a trade, knowing that you have calculated risk, and managing the profits. And right now, the environment is pretty darn good for stocks to be moving, indices to be moving, ETFs to be moving. And I'm not condoning that everybody has to be a day trader, but I'm saying that this is some action every day. This is opening bell. This is some action every single day. I know a lot of traders that trade E-mini futures and trade the major ETFs, and that is their bread and butter. And that's all they do. But like I said, if you're going to do it, it is concentration, no distractions, because this is critical that we see really good levels to trade, right? Isn't it important that we trade the best possible levels and the best possible price? We want that precision. So, this morning I went down to a 5-minute chart. That is my 5-minute chart. I showed this to traders earlier. The 5-minute chart is great. I love looking at 5-minute candles. But if you also want to see some, kind of an added visual element, you can change your charts. And again, not right away. Okay, not right away. But when you see the structure, and I'm just going to make sure that my stream is still going well. When you see the structure here, you want to make sure that let me see if I can see annotations, playback, auto. All right. So it looks like I'm going to bump my quality down so I don't lose the stream. You guys should see full stream, right? Like hopefully we have a good stream running, bit rate and everything's okay. Everything good? Just, I mean, I know there's a little delay, but let me know if everything's good. Okay. Full details, analyze the market using market cycles, market time frame. Oh yeah, that's good. I got it. I got you. Okay. So I was going to show you the 1 minute chart, but using the 1 minute chart with a Heikin-Ashi candle. Okay, so if you can see my screen here, this is a 5 minute chart. We're talking about that little gap fill on the SPY, buying it with our nice green confirmation here close to our gap. So we buy it there at 386 and change, right? 386.80. And then it goes up, we're up, fraction 1% for the day. If it goes up to the high, great, right? If it goes up to the high right here, you're looking at a 0.4 to 0.5% move on this instrument. If you're buying it here, you're at 0.4, 0.5%. That's a great day. If you've got a decent amount of capital and you're moving your account, 0.4%, 0.5% a day, a percent, that adds up. But like I said, you need concentration, you need precision. So take that 5 minute structure, learn how to trade price action. Let me show you how to trade price action. If you want to see some improved visuals, then what you can do is you can take this down to a smaller time frame. Okay, now keep in mind, before I go to a smaller time frame, I want you to pay attention to this level right here. This is the most important level because that is the close from yesterday and the market gapped this morning. All right, so that line is what I want you to see. Now watch this on a 1 minute chart. Okay. Now the 1 minute chart can give you some false information because there's so much activity on a 1 minute chart. Now in hindsight, you can say like, well, that's pretty easy, Chris. You can see it's high to low, lower high to lower low, lower high to lower low. And yes, in theory, that's super easy to see. But as you're trading this live, when this market opens and you're like, okay, it gaps higher, it comes back down a little bit. Do I buy this green candle? Or do I wait if I'm close enough? Like, what about this green candle? What about this green candle? Right? It's a little noisy. That's why I like the 5 minute chart a lot for those intraday trades. Now, what I'm going to show you is on my 1 minute chart, and you can take a note here. 1 minute chart, use a Heikin-Ashi candle. Watch. Now, do you remember me saying that the important thing to pay attention to is this line? So I want you to type it in. What is this line representing? What is this line representing right here? It has something to do with yesterday and today. What is this line representing? Because what you're not noticing is really important. This chart, this Heikin-Ashi time frame, is actually hiding something really, really important. And so hopefully what you're saying out there, what you're going to type into the chat is it's the gap that's missing, right? If I go to my candle chart, you notice that that's the gap. You see how important that gap is for our context? You see how important that gap is for our visual clues to see where we can buy? Yeah, exactly. Close price of yesterday to the gap of today. Exactly. Yep. Right. So that line is super important, which is why I start with candles. And if I wanted the extra visual help, then I can go to the Heikin-Ashi, which is right here. So if we're coming close to that line, this is why I want to show you that. Because if we have our gap reference right here and we get close to that, look at how beautiful this is right here. We come into that gap and notice how the Heikin-Ashi turns green. Turns green right there. Okay, so let's actually mark that. Let's mark that level and say that we're going to take a buy trade as soon as we have a green candle, which is a tiny one, but we're going to have a green candle right in there. Okay, now if I reference that compared to my 5 minute close, let's zoom in on price for a second. Okay, if I reference this right here, if I took that Heikin-Ashi candle right there on a 1 minute chart, I want to see if this entry is better and slightly more precise than my 5 minute. So I will go back to the candles. I will go to the 5 minute chart, 5 minute chart. And you notice that that 1 minute entry is slightly better, right? You notice that the 1 minute chart is slightly better right there. And again, it's fractions. You're literally talking about 13 cents of difference in price. But that's 13 cents that you could be better off for break even. That's 13 cents that it's no risk, right? I mean, I know it's not a lot, but in the world of precision, it makes a big difference. Okay? So, do I always go down to the 1 minute chart and trade Heikin-Ashi? No, but it's a really nice visual to have up on two charts. If you have your 5 minute price action and your 1 minute, you know where the gaps are at, you can take those trades. Make sense? So let's walk through a couple of examples. I'm going to kind of continue on with some price action stuff. I want to go through the stocks today. Markets are still pushing higher, right? We gapped higher on the SPY. We gapped higher the Dow Jones. We've gapped higher and closed, but we're going back up on the Nasdaq. Currently, Nasdaq's up like 1/3 of 1%. The VIX is smashed right back down to $20. The Nikkei is still going into great crazy territory, 1.5%. The Japanese markets can do no wrong. Currency-wise, if I show the currency strength chart right here, currency strength chart. This is in Forex. We're seeing that the Aussie's making a nice little recovery this morning after being in the midst of everything today. It was a pretty noisy day, pretty quiet day. The dollar has been progressively weaker, a bit of a reset. I'm glad I took some profits this morning. For my elite signals, I closed out dollar yen long. I closed out dollar Swiss long. I'm looking for reentries, and guess what? I'm getting some opportunities for reentries. All this is good. I'm still holding dollar CAD long. I'm still holding Aussie dollar short. I'm still holding New Zealand dollar short. So my dollar has not changed as far as the outlook goes for the next, 1 to 3 to 4 weeks. My outlook is still, higher time frames. But today's price action was not favoring the dollar. Probably some profit taking, probably some retracements, and that's fine. And the numbers were not great. The job numbers today were pretty awful, right? We had, let me find the calendar here. So we had employment for the Canada. So we had a big miss in Canada. We had an awful unemployment rate in Canada. Average earnings for the U.S. was down 1/10, 1%. Revision was up, which was better, but our current was down. We forecasted 85K. We came in at 49. We had a negative revision by almost 80,000, 87,000 to the downside. So a negative revision, that's a big miss for January. Okay, and then unemployment rate is down 0.4%, but that also means that it's probably more people leaving the workforce, less participation. So, the picture that we're gathering here is like job market is still not great. Unemployment claims is still high. Look at our numbers yesterday. Unemployment claims yesterday, so 828 was forecast. We came in at 779. That's still a ton of jobless claims every single week. So are we out of it yet? No, we're not. But does this derail me from being dollar strength or dollar long right now in my outlook and Forex pairs? No. My bigger time frame, I still like all of the imbalances that the dollar created over the last 5 or 6 months. I'm looking to fill those areas. Okay? All right, let me get back to the charts here. I just want to go through a couple of quick examples. Take a look. Let's walk through and look. I'm just gonna zoom back. I don't even know what is like. If I go on a 5-minute chart, I lose context, right? If I'm looking at a 5-minute chart, I lose context of where we are. Higher time frames, that's what I need to put my puzzle together. Smaller time frames, it gives me the precision to be intraday. So let's just walk through a couple of these examples. Now, right now, talking about this lesson could be something that you use, and it doesn't matter if it's a 5-minute chart. It doesn't matter if it's a 1-minute chart. If you can put together some price action clues like this, you can trade anything. And you can trade this on a 1-hour chart. You can trade this on a 4-hour chart. You can trade this on a daily or weekly chart. This type of price action does happen over and over. Okay? And I think that's incredible, because if we can learn this strategy, if we can utilize price action, then our entries are amazing. We get entries to buy extremely low. We have entries to sell extremely high, and we trade, right? So let's just walk through some examples. So let's just start here. I want to start on the left side of the chart, or I'm sorry, the right side of the chart. So what you'll notice, check this one out. Let's start right here. Okay, let's talk about this. Now, can everybody see this? Let me make this a little bit bigger. This, and again, like I said, I'm on the SPY. It doesn't matter. I could go to any instrument. I can show you the exact same thing. But all I'm talking about is think about the context of the bigger time frames, right? Viraj is asking about price action, how to get it set up. Viraj, you have a ton of classes that are already available. You have, a Monday class from this week on the 1st of February. That's in a recording. The Flex Trading Room, we've walked through, I don't know how many setups this week. At least we've walked through like probably 8 or 9 trades this week on the Price Action Pro. I have 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 9, 10, 11. I have 11 trades since last week with Price Action Pro. So those are 11 examples that you can find in the Flex Trading Room recordings. Getting that thing set up, if you're asking me like, how do I put it on my charts? go inside your classroom, look through that auto trading welcome package, and there's step-by-step instructions to get that robot on your charts. You have to register it first, then you can put it on your charts, and we are applying that thing every single day. So if that's what you're looking for, that information is inside your classroom. Okay? All right, good. Okay, so let's start on the right side of the chart right here. Let's talk about this price action. All right, now, again, answer. I'm going to ask some questions. Answer. You see that we have a gap, yes or no? So the day closes here around 366, right? And the day opens around 368. Now again, price is irrelevant, okay? This instrument is irrelevant. This is just a price action 101 lesson, okay? All right. So what I'm going to do is I'm going to mark with a horizontal line. I'm going to mark this high right here. Everybody see that? So what I'm going to do is I'm going to mark this high because that is where price showed the latest structure, right? We closed right here. We had previous highs right here. So when the market opens higher, right here, this is what we have to think. This is what I'm thinking, okay? I'm thinking if price comes back down in any way to this gap, I want to be long there. And if I'm going to be long there, I want to be out with invalidation either below this recent low or below this recent low. So does it make sense that this would be my stop out area? Like this would be enough to be invalid. So I give it some breathing room. But if I'm looking at this trade, if this is, good structure coming back to find what was resistance becoming support, we look for bullishness off of this and we try to take it back to the high or see if it wants to run. But our risk is here or here. You make that decision on what you're willing to risk, how big your trade size is, right? So I would say that if we think about this, as soon as we open, are we going to buy the market right away? And my thoughts are no, I'm not going to buy the market right away. I'm going to wait and see, does the price come down into an area that I'm looking to buy, right? And so what you'll notice is price does go a little bit higher, and it might be tempting. It might be tempting to see this as, we're at 369. The highs are up at 375. We've had highs of 380. Maybe I need to get in. Maybe you do. But if you're thinking, I got to get in, then think about this. If you're going to get in here, this should be a partial position, right? Partial position. And then your second level, which is where you want to get in, would be here at the previous close, right? Right in that area with that past structure. Yes or no? Right? Does that make sense? So if you want to participate and you feel like I can't wait any longer, I got to get in, then you can get in. But it would be with a very, very small trade and it'd be a partial position because the better entry is waiting. The better entry is to let price come back to where you want it, right? So if you did take a trade here, fine. And let's say that we're traders, right? We have no patience whatsoever. We can't stand to be out of the trade. We can't stand to be missing out. So we're going to go ahead and take a trade right here. So I'm in trade one. Now, I would take whatever my trade size is. Let's say I'm going to put $500 into the trade. Okay? Oh, and let's say it's $1,000. Let's say it's $100. I don't care, whatever. Let's go small. Let's go $100. If it's $100 right here, I'm going to take $50. $50 at this price and $50 at this price. Does that make sense? So if I put $50 in, and my break even is here in the middle, and I'm in for a $100 position, I know that my risk is somewhere down here, and I'm probably looking at around a 30 to 40% risk on this position. It's not a detriment to my overall portfolio, it's just my position, but that's where my trade will be wrong. Now, if we get back to the highs or higher, I'm looking to manage my reward to risk. Yes? Okay, so we're going to take a trade here because we can't stand it. We got to participate, so we're going to. Right? So trade one, trade two is if price comes back to us. So let's watch this unfold. Now, if you couldn't stand waiting, now you're angry at yourself, right? If you can't stand the patience, if you can't take it any longer, you just got to get in. This is where you're angry at yourself. This is where you're slapping your keyboard. This is where you're mad. Like, just wait for price to come back. Okay. But you still can use trade size and partial positions to know that you're not sweating it. If I did take a trade here, fine. This is trade one. This is trade two. And I know that I'm going to still build my position the way that I want to. Okay. But let's pay attention. Let's see where price comes back. Okay. Now, We are now starting to get in some territory. Is this not a good example right here? If we were seeing that price came all the way back and filled about 80% of our gap here, about 80% of the gap, would this not be a pretty good spot to consider getting in? Right? Would this be a nice little candlestick right there? It turns green. We're about 80% filled to that gap. That's pretty good. We also came back into this same gap right here. So again, I'm not going to say like I'm going to do this perfectly. Like obviously, I would love to buy it right here at 366.59. I'd love to buy it right there, but I would buy it there. I'd be thrilled if I bought it at 367 because I know I have a pretty good entry. Okay, now let's see what happens. Price falls right back down to where? It falls right back down and fills the gap, doesn't it? It fills the gap. Now, what I want to see is if I bought it here and I bought it over here, let's say this is my 1, this is my 2, and then you're kicking yourself like, oh, it filled the gap just like I said it was going to. But this is real stuff. Like this is what traders do. Now, my stop loss is here. So let's see what happens, right? If I'm in these positions, let's see what happens. So this essentially gapped higher, spent the entire day closing, and now we're looking to go higher. Okay. So is your trade, are you profitable on the day? I guess that's what I'm asking here. If you take the trade here and you get back in, this is trade 1, this is trade 2, your stop loss is below the swing. We finish the day in the red. If you hold it the next day, you're pretty much back to break even on trade number 2 or entry 2. Your break even is somewhere in between. That this was our risk, right? This is our risk. This is our reward. So let's see what happens. Now, are you happier from one day to the next? Are you happier from one day to the next? And you can take this even a step further. And again, there's a lot of layers here when it comes to these trades. If this is, I need to participate, I want to have a good price level. So this is trade 1, this is trade 2. Traders, look, this is a new day. Though we close here, we open here. If I didn't trade the previous day, what would be my analysis this day? Would it not be the exact same setup? We gap higher. If we pull back and try to fill this gap, wouldn't I look for a buy opportunity right there? Yes or no? Right? So if I had $100, if I had like $50 here, $50 here, could I put another $50 over here and have this thing where now my break even is a little bit lower, and if it goes up, I'm in profit now? Everybody see that? Like, just because I'm trading today, if I carry it over, it's like I'm still in the trade. I still know where my trades are at. I still know my reward. I still know my risk. And this happens to cooperate by a lot. We're all the way back up to the highs again. And so our position 1 is break even. Our position 2 is in profit. If we add it on a new day, position 3, that's in profit. Now you're talking about I've maybe got a 0.5, 1% gain overall, right? So it's price action. You go to the next day. Okay, you go to the next day. This is perfect. Now, this next day right here, when you're back up to previous highs, if you're going to trade this fresh, next day we have a tiny little gap. We go down. I would say the stop loss is probably here. Look left on your chart. We have a low right here. We have a high low right here. You want to give yourself some breathing room, right? Don't be so super tight in the stop. But, a daily pivot's always a good level too. Daily pivots are oftentimes really supportive of the market in a bull trend. So daily pivot, I wouldn't want to see too much price invalidate it. But look left, that's a great spot for a stop loss just to be out of the way. And so if you let it, quickly fill the gap, you can take a small trade in here. Maybe look at an entry here, right? Once you look at something like this, previous high, this is resistance. Look for that to be future support. Trade 1, trade 2, stop loss below the swing. Isn't this price action? Yeah. Okay. So we do it, right? Like a couple of buy trades, looks good. Where are we going? Win the day. Like it's up for the day. I mean, our entry here didn't come back below the pivot. It went up and closed higher on the day. That's, 369 all the way up to 371, just shy of 1%. Next day, we gap, right? We gap. Now, interesting. We keep talking about this gap stuff. If we have this close to this high, do you jump right in or do you wait? Okay, do you jump right in? Do you wait? We should be waiting, right? This is my high right here. Look at that. How beautiful is that? This is my high. This is my gap. Now realize that the entire thing can gap and close. We could close the entire gap. But a lot of times we have structure inside of this. So this high is where this high gets met. And you notice how you have a beautiful reaction right there with that bullish candlestick? Yeah. So if you're looking, this would be a great trade one. And if we came down to fill the gap, this would be trade two. I would put a stop loss below this recent low. So you're working the area, trade one, trade two, work the area. And if we go higher, then you're working some profits. Let's see what happens. Okay. Now, I didn't know this was going to happen, but what do you do? Okay. What do you do? Now, remember, we're talking about all these fractional trades, right? Portions of 1% of movement in the markets or the ETF or this instrument. What do you do? If this was your plan, if you bought it here, okay, and it went up on the day, are you break even on the position? And it doesn't matter if it's day trading or a daily chart. I mean, if this trade happened where it came all the way back down here, I don't think it's worth hanging on to this trade. Unless it was part of my plan in the very beginning. And this is like kind of my lesson here. If my plan is to look to trade and I'm illustrating like this is where I put my stop loss. If that's my plan and I'm allocating that type of risk and trade capital to that type of plan, guess what I don't want to do? I don't want to all of a sudden make a backup plan where it's like, okay, I said I'd buy it here. I said I'd buy it here and I'd stop out down here. Well, what I'm telling myself now is, well, maybe I shouldn't stop out. Maybe I don't want to stop out. And all you're doing is taking on all of the drawdown and all of the unnecessary risk, right? And Susan says, stop reverse. Good question. And I'm going to say no on this. And part of that reason is I know this particular instrument is a what? This particular instrument is a stock, right? It's an ETF. It trades very closely with the stock market. The stock market has been overly bullish. So to turn around and short this, probably not. So I think what I'd be doing, in all honesty, is this would be trade one. If we came down to this level, I'd be interested in trade two, but you notice how it's falling pretty aggressively. I don't have confirmation to buy it. But if I was interested in buying it, I would probably buy it really, really low. Now, if my plan was stop loss below this daily pivot or below this area, when it invalidates it, this is the hardest thing to do, but probably the most responsible thing to do is just get out of the trade. Like this trade, if it goes against you and invalidates your trading plan, it's better to just close it, lick your wounds, and go trade another day. You're not losing all of your money. If this was $50 and $50 and it goes against you, your $100 position is maybe worth still like $50 to $60. You're losing value on the overall position, but you're not broke. It's like it's a trade that you get it back. And you take your margin back and you're like, okay, now what do I do? If I closed out for a small loss here, now what do I do? Well, context clues wise, I'm looking for this gap to try to get refilled. I'm looking for some bullishness to take place and see if we can have what I'd like to see is maybe this can gap lower. Maybe this can gap lower and I can buy that gap immediately and see if I can fill this gap with price, right? And again, I don't know if this is going to happen, but let's find out. Let's fast forward. Okay. So we have, again, nice candle here. I mean, again, it came right to where I'm like talking about invalidation and stopping out. I get it. So if you close out for a loss, you close out for a loss. But if we have a price gap right here, I am really interested in, this new day is opening. It's falling down really aggressively. I would be looking at a trade, some good action over here and maybe an equal low to buy from. And again, this is totally off the cuff. Like I have no idea what price is going to do when I scroll forward. I could be totally wrong. But if I'm putting together some context clues, we have a pivot right here in the price. We have a gap in price action. And if I saw like, okay, this looks more promising for a buy, if I looked at equal lows, let's see what happens. Okay. This is current price, right? This is current price. So guess what? If this was where I'm buying and this is an equal low, trade one, trade two, obviously my stop is going to be further left on the chart. Oh, shoot. Never mind. I forgot. I thought it was done. It's not. It's right here. We gap lower. Okay, fine. So look, think about the trade. If this is trade one and this is trade two, does this actually produce some profits on the day? Yes or no? I'm just asking. Does it come back and fill the gap all the way? No, it does not. But if my mentality is I'm trading this for the day, I'm trading to kind of win the day. Did this market offer a chance to close the day positive? If you bought, here or this equal low, you bought it. That was a great little run to close the day out, wasn't it? From around 368 to 370. I mean, again, shy of 1%, but that's the instrument. That's a great day to close out a winner. Okay. Now we did exactly what I just talked about, right? Can everybody see this? Can you see that we just gapped lower right here? This is fantastic. We gapped lower right here. That's awesome because now I'm looking at the same thing. Now I have this gap that I want to keep in mind on or an eye out for, and I have this awesome gap right here that opens right away. Okay, so let's think about that. Price gaps, and again, we'll talk for another, I don't know, let's do another 15, 20 minutes. But this isn't, this is just one thing. Like this is one instrument, one thing, walking through some examples of price action. We can go through this on higher time frames. We can use other instruments, but I think if I can lay a foundation for this session, I think it's going to be helpful. All right, so we gap lower. Now, I'm telling you, if I was in this trade, this gap's lower, I'm interested literally at the onset of the trade. Trade one. Okay, now what I'm interested in is trade one is I see the gap. I want to see if we can fill it. Trade two is price confirmation. Now, we drop from our entry, right? We drop from our initial gap open and we start to go bullish. I'd buy it right there. Right there is going to be my buy trade. Okay, right here, I'd buy it. And then it drops lower. Now I'm going to start looking for price action. I'm going to start looking for a bullish confirmation. I'm going to start looking for a move off of this level. Like if we start dropping aggressively and start holding there, we could buy these green levels. We could buy these indecision candles. We could also turn this into a Hekinashi. Oh, come on. Don't do that on me. You got to be kidding me. Fudge. What day was that? Dang it. Does anybody know what day I was on? Sorry. I should have not changed it. I should have marked it first. Fudge. Where are we at? Here. I think, is that it? Man. Where are we at? Where are we at? Where are we at? Down here. I don't remember. Fudge. I lost my place. Who can help me out? You sneaky dog, you. I'm looking for those gaps. Is this the gap right here? I think this is it. This is it. This is it. Okay, good, good. I got it. I got it. I'm going to mark it with a vertical line there. That way I won't miss it. So there's the level that I'm looking at. This is the trade we were talking about. Okay. So we have our gap lower. That's good. Trade one is right here. Sorry. Trade one is right here. Trade one is right here. Trade two is we're looking down here. But again, if I'm adding and it's going against me, number one is if I'm getting in, I'm leveling in, I'm looking for that gap to fill. How do I find it? If I'm using this as my vertical bar, like this is our timestamp, so I can now change it to a Hekinashi candle. That's what I was trying to do right here. Let's find that vertical line, right? Where's my vertical line? There. Man, you got to go way back on the Hekinashi. Perfect. Okay. Can everybody see that we're on the same line? This is our vertical line. You don't see the gap, right? You see it on price action with the candles, but not with Hekinashi. But look at where the Hekinashis give you the evidence to buy. Okay, now again, candlestick wise, you bought the gap right here. You bought the gap and you're like, I'm going to fill it. I'm going to fill that gap. That's my profit, right? Now it goes lower and you have Hekinashis turning green right there. Trade one, trade two. You try to get trade one back to break even. You try to get trade two all the way to the gap. That's your win. You know what? So look, losing on this trade over here doesn't matter anymore. You lost, you cross it out, you go find another day, you go find another instrument, or you just stick to your guns and trade the strategy. Trade the price action. So evidence, right? Between 5-minute charts, 1-minute charts, Hekinashi candles, really simple visual stuff for some price action. All right. So what I'd like to do is let's get on some other stuff. I know for some of you out there, who of you out there are, yep, Andrea says, don't use high octane. Of course. Yes, I can show high. Where's that vertical line? Vertical line. Okay, let me go into I've got to open up the chart here. This is the trading day is December 21st. Okay, so I'll go into high octane. Nope, fudge. It's not what I wanted. Load, go to, come on, bro. Load and high octane. There we go. And it was December 21st. All right, so let's go to December 21st. Let's go to a 5-minute chart. Let's go back to December 21st. Okay, December 21st. Now, I'm going to be looking December 21st. Here it is. Okay, perfect. So yes, for anybody that's in my high octane, can you use this type of price action? Hell to the yeah, you can. Look at this. This is the 20. Is this not it? Like this is our gap on the 21st right there. Look at this vertical line. Vertical line. So there's the day that we just talked about, you know, entering in on, why are you filling my gap like that? Hang on. There. Sorry, I think the timestamp just switched over. All right, 5-minute chart. Got to zoom in. Here's my vertical line. This is the gap that we talked about. Now look, I've got this high octane system, this high octane indicator. It's the same price action. You know, what I'd like to do, if I can teach this to you, if this is something that can resonate, is hide the indicator. Learn how to trade it naked first. Learn how to trade it like I just showed. Price action, right? Then, as you're waiting for the turn that bad boy on, right? Is this a much easier way to buy it right here? If you look at, okay, so I saw the gap earlier. I bought it there. That's trade one. Now, my high octane wasn't green. You know, it was red the entire time. So if I just simply waited for it to turn green, I would have bought it right there and never had any drawdown. And it goes back to fill the gap, and we're making profit on the day. Perfect, right? So that's the 5-minute chart, high octane. That's fantastic. How about a 1-minute chart? Same thing. Let's go to the 1 minute. Let's find that vertical line for December 21st, and let's look at it again. It's just another good example. But will we see confirmation on it? You bet. So let's go back. Come on, chart. There we go. Okay. So we have our gap to the downside. Okay, so we have bullish here. It gaps lower, which changes my high octane to red, and lo and behold. Yeah, and what would have been, you know, again, knowing what I know as far as like the price gap, I probably would have bought it right there, and I know that it was still red on the high octane. I get it. But what I could do with a lot of confidence is if I bought it here, that is my choice. And then if I get confirmation over here, that is using my system. That's using my strategy. And so this is me, you know, kind of using my experience and guessing. This is me using my system. And in this example, obviously, the system pays out much better than me. You know, I'm in early. I'm in anticipating. This is the system confirming. And that is obviously a much better trade. Okay? But like I said, if I can teach a really valuable lesson with high octane or any price action lesson, it's that, you know what? If you didn't have any indicators, could you still trade it this way? Because, you know, and I'm thinking about, you know, how long I've been doing this, how long I've been trading, and I know that maybe I talk through this like it's so easy. Like, I'm not saying this is so easy. But if you build this routine, if you build this repetition, if you see these trades play out with price action all the time, you build this arsenal of experience, right? You build this memory of all these different things you've seen play out in price. And again, that becomes your experience. That becomes things you can apply to the market. So I know that I get in early, but if I could teach you how to see this with nothing on your chart, it gets easier when you have something visually friendly like high octane, like the Heikin-Ashi, like, you know, a moving average trend line or crossover. But I try not to get, you know, too ridiculous with indicators because they can also just give you misprints. You know, I mean, if I had a moving average on here, we could have a moving average that goes from buy zone into sell zone and then starts to cross over right here. Or maybe it crosses over here and gets sideways and you're like, well, what do I do with that? I mean, you can guess a bunch with indicators that are they're just indicators. You know, I mean, they mean something, but the indicators are completely calculated by price. So if I could teach you how to trade it only with price, I think you're going to build a better foundation to then lay on top of that the visual assistance of your systems and indicators that way. Does that make sense? Like, can I get some acknowledgement there? Like, is that a better way? Like, if I'm thinking like that's how I'd like to teach people, Am I crazy, or is that a pretty good way to start? The basics, the foundation, the essentials. Teach that, and we can build on that. So trading support, trading resistance, trading structure, trading price action. We can put indicators on our charts that help us. We can put visuals on our chart that help us. Make sense? So that's to me, like, that's my lesson. Like, I love it that traders can use all these visuals and use all these clues, but it's not it's not a crutch. Like, it's not how you should be walking, right? It's not how you should be, like, it's not 100%. Nothing is 100%. I mean, hell, even price that I'm talking about is not 100%. But I feel like I can put together my plan with price. And you know what? Like I said, I see the gap. I know I want to buy it. But to stay patient, a little indicator does a lot for me. It keeps me out too early, right? It gives me confirmation to get in when it's a great entry, and it goes all the way back up to this very obvious visual, fill the gap here, fill the gap here. This is my confirmation to buy. That's an amazing trade with virtually no drawdown, right? Like, the trade never goes against you if you wait for confirmation. And that is the balance that we're always trying to strike, right? We're trying to strike the balance of, using the right context of the market, making the right decisions, maybe having some visual help, and just trying to have trades go our way. And when trades go your way, manage profit and have a target. And if you have your risk outlined and you're making that in reward or better, I mean, you can make a lot of money. You can make a lot of money if your risk is $100 and your wins are $150. If your risk is $1,000 and your wins are $2,000, you can make a lot of money, and you don't have to win all your trades. And I say this a lot, and I feel like I have a little bit more freedom to speak right now, as far as we talk about a lot of systems and strategies with market traders. But my point is, traders need to understand, if I have anybody that's new watching this right now that's never seen me in a webinar, that is like just looking for education, or if any 20 something or 16-year-old or college kid that's watching this video, I just want you to understand that I care about learning how to trade. From day one wanting to learn this, like, I've gone through a lot of different experiences. I've tried a lot of different things, and having some financial literacy and financial education is so important, because trading can be super rewarding, but it can be, this massive, like, black hole ether that you have no idea what you're getting into. And case in point could be literally a week ago to now, GameStop to today, how different the market is, how different the vibe is out there with Wall Street bets and Reddit and social media. That was like a one-time thing. I don't see GameStop going back up to $400. I don't know how much emphasis is going to be on these big squeezes, because I feel like, big short positions are going to be a little bit less transparent. So anyway, that's just my little rant, my PSA for the day. If you're out there and you're watching me for the first time, I hope that I can at least send a very clear message that I care about teaching traders, and I'm going to do it for free. Like, this allows me to do it for free. I want to do it for free. All I ask is, if you like it, you let me know. You like the video, you like it, you subscribe, and you spread the word. If there's other people that can benefit from this, like, I don't know anybody right now in the world that is not thinking about investing, that is not thinking about trading, that is not thinking about having some type of capital that they're like, maybe I need to open up that little account. Maybe I need to take that $500 or $1,000 to start trading. What can I do with it? And understand that you can do a lot with it. You can do amazing things with it. But you have to somehow figure out how to nurture it. You have to water it. You got to take care of it, because it's really easy to have this idea and think that it's going to be all these gains and all this money. Look, right now it is an environment that's creating a lot of bad habits, because traders are willing to, like, level in. Traders are willing to put in, tons of capital and over leverage, because they're like, it's going to go up. The market's going to go up. The market's going to go up. But what if it doesn't? What if we reach a point in the stock market where we don't see new highs for 10 years? What if we do what happened in the Nikkei 225, where it's been over 30 years since we've seen the highs? That is a reality. So always thinking that the market's going to go up and up and up, like, there's going to come a day and there's going to come a reckoning where it doesn't go back up. And you have to know that that environment is something you can learn how to trade. And when you trade it, you can still make profits. But if you just assume that it's always going to be good and it's always going to be the perfect environment, like, that's not real. So anyway, that's all I'm saying. That's my little PSA for the day. Okay. I'm getting asked to do a webinar here at 2 o'clock. Tyson's already texted me a bunch. So I'm going to do a webinar at 2 o'clock. Any questions for, today I know it was a little Q&A. Let's do this. Let's spend like another 10 minutes. Let's do a little recap today. Okay, so I'm going to make the high octane go away. I'm going to go to a daily chart. Let's talk about some overall positions. I'll tell you, like my weekly outlook, I was talking about dollar pairs. Okay, so the US dollar, right? US dollar on the daily chart, lots of support over here. So my dollar, let me switch the workspace here. Let me switch the workspace. I've got this one. There, that's perfect. Okay, that way I can use the analysis I've already done. So let's go dollar index. I'm going to go US dollar index and DXY, dollar index. Okay, look at where we are. Okay, now this is dollar index. This low is 2018, major support also at 2015-16. The dollar is not guaranteed to go up. Okay, now we have some really good price action. I think that candlestick wise, we are in a pretty good situation where, you know what, we have broken the trend line. But today's dollar index daily candle is not looking very promising. Now, there's a couple things that can happen with this dollar index. So pay attention. Okay, I think that this dollar today is coming right back to test this level. Now, if that is it, if we have today's sell-off is Monday's starting point, then we can see if the dollar gets its groove back. If the dollar starts to come back, and you know what? Today was a nice little profit-taking day. The market came right back down to support, came right back to good structure, and then the build starts to happen again. Then it's still a great trade, you know? And to take that one step further, even if today's little sell-off comes back down into this low, I am not changing my plan because I've said from the break of this trend line that I'm prepared for the dollar to break the trend line, come back and retest the backside of the trend line or the lows from 2018, and then I start building a position from there. And this could all be just a big reset. Like if it gets worse next week and we see, weaker dollar, fine. That means we're going to be patient and holding on Aussie dollar, Euro dollar, New Zealand dollar. I haven't gotten into pound dollar yet. Dollar CAD, dollar Swiss, right? So question is, are you prepared? Are you prepared for this? Are you prepared for this to potentially drop back down? Is that okay? Because I'm okay with it. In fact, I would say I'm going to buy the dollar more down here. I'm going to buy the dollar more down here with some confirmation, right? Good price action there, good bullish reaction. I'm going to buy more. And I know that I can go to this high. I know I can score a point for those bulls. I know that we can get a pattern up here. We have target and pivots galore. We have pockets and inefficiencies, oversold conditions. So, the squeeze of GameStop, it's not a squeeze on the dollar, but it's a correction. But a squeeze and a correction is possible because we have a 5-month downtrend, because we have a 3-year multi-year low, right? So yeah, the correction, the squeeze is very possible. So this could be a little bit of a breather. The resumption happens here. We have more oversold, more divergence, and that becomes the reversal. And I could definitely see that happening. So again, come back on Monday for the weekly outlook, and we will find out, is this going to be where we stop and start to build off it again, and everything's fine, and nobody's worried about Friday? What happened today was a profit-taking day. What happened today was just a bit of a reset, but it doesn't change the overall trajectory that the dollar's on right now. If it comes back, this is why I draw trend lines. If it comes back to the backside of this trend line, I am really excited about the backside of this trend line offering some support. Boom. And then we get a pattern from there. Okay. All right, so that's dollar index. I'll show you the same thing. This is DXY. Okay, dollar index, same thing. So we have some previous structure here at 90.71. The dollar's getting reset. Notice how we have on the dollar, we had a promising looking head and shoulders right in here. Okay, left shoulder, head to neckline, right shoulder. Where have we come back to? What is this right here that price is very close to? It's coming right back to the neckline. Okay, a textbook head and shoulders pattern is going to look like this. Left shoulder, head to neckline. This becomes our neckline. We break it, we come back and retest it, and then we go. So we might just come back and retest the neckline, build that support, and go higher. And that's going to be right here. We're going to find out literally Monday. Monday next week, is it going to bounce and go up? Is it going to come back in a little bit lower and try to find the monthly pivot, maybe find that right shoulder area and then go up? Or are we coming back to that backside of the trend line? My position isn't going to change. Okay, my outlook isn't going to change. It just means that if it goes a little bit lower, I'm going to be more patient, right? I'm not jumping all into dollar pairs. I'm very patient on these. So Forex wise, Nadeem, if you're the one that wanted the Forex stuff, Aussie dollar. What's happening on Aussie dollar right now? We've broken the trend line. Great. Let's break the trend line. Let's find that monthly target and let's sell off from there. Let's break the trend line. Let's come back and retest the back side of the trend line and let's sell off from there. Right? Makes sense to me. That's what I'm trading. So I would look for, again, same thing, either monthly pivot, which is right around the breakout point at 7,700. We took short at 76.65. But if it comes back up to revisit the high, that's around 78. We have a position to sell that. I'm selling it right there. So we're here. We've taken some profit. We're looking to reload. I like this back up at the high. And if it's sideways a little bit longer, fine. If it's coming back in and then it makes the lows, fine. This is where I'm expecting price to come back to, a previous level of resistance. Okay, that's Aussie dollar. Today was a reset day. It's coming right up to the weekly pivot and the monthly pivot. Not a big deal. Euro dollar. Did this come down to our profit level? Yes or no? This one we are out of. Like euro dollar did exactly what we wanted. It came into our pocket. It came into our 1.20 level. In fact, it went like 70 pips through it. So this is a great level to be profitable. This is a great level to be protecting because we were short at this level and the break of the trend line. And we had a good chunk, right? From 2,300 or so down to 20,000 or 2,000. 300 pips. I mean, that's not nothing. And a couple of extra trades, like we should have done pretty well in the euro dollar. And now I wait because the flip side of this is I like dollar Swiss. I love dollar Swiss. And what's this one doing? Dollar Swiss is right here. There's my left shoulder. There's my neckline. There's my right shoulder. There's my break. If we come back and retest the neckline, let's go. Still have room to run. If we have nothing more than a pause, like we've already broken the neckline pretty clearly, if we pause right here, we get a bounce and we go. That's all I'm looking for. So doesn't change my plan on dollar Swiss. Yearly pivot is still at 91.87. Target is way up here at 93.50. That's my big pocket I want to trade back to. Longer term, if this is nothing more than trendline breaks, if we can get to this outer trend line here, start spending some time on the right-hand side of the trend line, I think we have another big pattern coming. And I know this is reviews for many of you in my trading room. We've talked about this, but for anybody that's watching this that's new, this is a fantastic reversal pattern. We could have dollar Swiss going way up towards 98.99 or 1.00. And that is a monster trade. You talk about, for me, it's like GameStop type profits. I could make that in here. If we have a confident, 400 to 500 pip area or 1,000 pip trade, we can make we can make a killing in this market. But when these set up, it's like we have to pay attention. We have to be patient. These are excellent trades. Okay. All right. New Zealand dollar. You're going to see the similarities on this. New Zealand dollar on the right side of the trend line. Cool. So what do we do with it? We stay patient because it has not shown us any evidence to break below 7,100. So if it breaks below 71, I'm looking to be short and more aggressive to target this previous high at 68. That is a nice 300 pip area of should be pretty aggressive bearishness. But if we are going to come back and retest this high or work the backside of the trend line, I am totally fine with that. I'll still short it. And if I look left on the chart, take a look. If I look left on the chart, look at all the resistance over here, right? Resistance there, pockets in here. We've already hit them. So we've come back and found a lot of these pockets. Yes? And we have stretched out move, tons of inefficiencies from this run from last year. So the reason I like the Forex market so much is, yes, we had this incredible, 2,000 pip recovery, just shy of it. From 56 to 74, it's like 1,800 pips. That's an incredible run. The one thing that tends to be missing is when you have this really long stretch, the market finds a way to come back. When you have this really long stretch, the market finds a way to come back. When you have this really long stretch, the market finds a way to come back. That's why I like Forex a lot, because we can build some amazing positions and take a lot of profit out of this major time frame and structure. Okay. All right. Dollar CAD, one more. Pound. I'll do pound dollar as well. Dollar yen. Why not? Let's just do the dollars. Yeah, for Forex. Okay, so dollar CAD is 27.70. We're long. My trading room's long at 27.55. Again, wait. Like this could be some ugly head and shoulders pattern. We still have this neckline setting up here. Maybe we just need to break above it and keep going. I still like this trade at 130. If it's going to fall a little bit lower, that's fine. I'll work the backside of the trend line and take it up then later. But, CAD was softer today. Maybe this just needs to break a trend line. So we're pausing. We get another break to the upside. One thing that can help our dollar CAD is oil. If oil starts to turn south, I think the dollar CAD will start to U.S. oil. If oil turns south, then the dollar should be firm against the CAD. So oil is up here towards this pocket, yearly target, right around 57 and change. Tons of resistance between the $60 and $65 area. That to me is like, I don't know why oil is continuing to extend the way that it is. I don't know why. Canceling the Keystone Pipeline, I don't think is the reason that it keeps stretching. I think that this incredible, zero and negative level was just like everybody's holding oil. And it's been this incredible recovery. Now, it could come all the way back up here, right? We're in this area. This could be price just keeps drifting. That's fine. Get to $60. But when it turns, it's going to turn. It'll fall. It'll find support resistance. But that's why I have a trend line on this. Okay. All right. So that's dollar. That's, I want to show oil because that's how dollar CAD could show a correlation. So if oil does start to turn south, then dollar CAD should go north for us. Pound US dollar. This one's not ready yet. Okay. This one is, I think this is a great looking setup right here. Okay. Right there is a great looking setup. But for me to take this trade, I need price to get below this area. It's a break around like 3,600, around 3,500. If we get on the right side of this channel, I think this is a good looking fall towards 3,000, maybe lower. Yearly pivots there. 3,000 is a round number. But you can tell that it's not ready yet, right? You can tell that this trade is still just, it's either going to start going sideways, right? Like it's going to go sideways, maybe enough here that it just breaks over and then we have a great sell trade on the right side of the channel. Or maybe it goes up a little bit more, sets up the high, and then starts to crown or reverse. But bottom line is the only trade I'm taking on pound dollar is a break of the channel. That would be my sell trade. Okay. All right. I got my dog getting antsy, so it's about time to go. Any other ones? Dollar yen. Let's do dollar yen. All right, bro. You're going to sit down. Okay. Do your thing. Dollar yen 135 or 105.37. We tapped the yearly pivot at 105.56. Does this change my outlook on dollar yen? Not really. We had about 8 days of bullishness. If we have this high and it pulls back, look for some confirmation to buy in here. Look for a higher low to form. Look for a retest of the backside of the trend line. I still like long on dollar yen. I think that we are in open space. What's interesting is 105 was this incredibly important level. And then we broke it, went above it, we broke it, we went above it, we broke it, we used it, we broke it. It was down here for a while. So perhaps that is another critical spot where this becomes a bit of a range. Like if we come back to the backside of the trend line or channel, maybe it chops around in here. I would say that this still maintains bullish posture. Okay. I think if we close higher, then I'm certainly only focused on being long to 109. So there's still some proof that I need from the bulls. If the bulls are going to break above 105.50, then I want to be long. Okay, but if it comes back and resets, let's say 104.50, 104.100, I'm still looking for some reaction here to see if I can get long. All right, so we'll assess this one next week. Okay, all right, let's do this. Let me go back to the little weekly outlook here. Any questions for me? I know we talked about a bunch of different stuff. I want to get back into price action. That was fresh on the mind from a session earlier today. If this is something you want to do every single week, I would love to have more and more people join. We had about 80 or so watching today. Fantastic. Love it. Let's do it every week. Spread the word. I appreciate all the likes. If you want to give me a thumbs up in the video, that's awesome. I'll get this video trimmed up. I'll post it in as an upload for my YouTube channel. It's now officially youtube.com/Chris Pulver. So I'm happy with that. Okay. Thanks for being with me today, everybody. Have a fantastic Friday, a great weekend, and I'll see you all next week. So weekly outlook will be hitting in the mornings as usual, and I can't wait for another good trading week in the flex room. Let's have at it. Let's tackle the markets. And again, if you have any questions like YouTube stuff, you can always leave me a comment. Right? If you're following me on social media, I'm on Twitter, I'm on Instagram, I got on TikTok. It's Chris Pulver Trading. Again, I messaging me, put comments in YouTube or direct message me on Instagram. Okay, and I think let me check something really quickly. I think those are here. This. So at Pulver Chris's Instagram, Pulver.Chris is Instagram, Pulver Chris is Twitter. YouTube, just type in my name or I'm sorry, YouTube is youtube.com/Chris Pulver. Type in my name. Same thing on Facebook. And messaging wise, like leave me a comment in YouTube, or you can DM me or direct message me in Instagram. That's the best way for me to reply. Okay. FX Strider, yes, that was my dog, my little Frenchie. All right, traders, thanks a lot for being with me today. Had a blast. Happy Friday. Have a great weekend. I'll see you all next week. All right, thanks. Bye.